Well, I'm not sure about you guys. I feel like there's a bit of a collapse imminent here, mainly led by interest rates. So we'll take a look at the interest rates later. Let's start off with the S&P. It was a down day. I expected that mainly because of the low of day closed the day before on Tuesday, but now we've got a bit of a full retracement of this little pop here in the S&P. I don't know what to expect today. I don't even know what is there news? Is there GDP out or something like that today? There's always news every day, so there's always at least one significant piece of news today, every day. But I actually think that we didn't close at low of day today. I don't know, maybe a sideways day, maybe another down day. Actually, I just feel like it's time for reality to kick in, and the markets are certainly not pricing in reality. So again, always biased to the downside, until we've had rates up for a long time, inflation coming down, and a recession, basically a depression. I think that's when you can say, okay, the bias is to the upside, fundamentally bearish. Technically, you can't say this is bearish yet until we crack a close below this ascending support. And I think we've got support at this horizontal line before that. So we probably have quite a decent bit of support just around here. But still, yeah, let's see, maybe downside again, to be honest. I just feel like interest rates are starting to scare people, and we're due for a massive down day. I'm talking about 2-3% down day. When are we going to get one of those? Um, anyway, S&P, Nasdaq, this thing is just absurd. I mean, I'd expect more of a downside yesterday. Yes, we've retraced. Obviously, it is still bullish. Look at this pop. I'd expect some strength here, this area here, let's say 320-ish, maybe just below. That should equate to the same as the S&P being around 403, let's say, if you can see what I mean, the horizontal and the ascending converging. So, but it found strength just before then. I don't know if this AI productivity magnification is still the belief. I think a lot of people think that AI is just going to solve everything. I mean, I do think it will solve a lot, but I think there'll be problems with early adoption. And, it's like everything, it takes time. And AI is not exactly new either, let's be honest, although ChatGPT is. But anyway, all of that aside, I actually still favor downside move in the Nasdaq. Sorry, just at least a breakout level here, at least the ascending base. So I'm not sure what to expect today because it's a bit of a doji, and it has come down for 1 or 2 days. But yeah, sorry, I'm still going to go with downside. Dow Jones, that's ugly. All right, you can say the S&P and the Nasdaq can go either way, but the Dow is, closed below its horizontal support. This is what I was looking for. This is what actually I thought would happen. And now, yeah, I mean, unless there's a massive rally in the other markets, I think, and unless the Dow Jones is able to close above, let's say 33,000, but what I mean is this horizontal line, just more downside, fundamentally the markets need to go lower. Technically, this thing says we're going to have to go lower. So I'm going to go with a lower move, maybe 32,500. Nice round number, also slight, mm, not too much, but, we can't go in one go to 32,000 or this horizontal lines, but gradually and slowly, just another down day I expect today. The Russell, after yesterday's very, very strong resistance candle, we had another drop. Doesn't surprise me. The lowest of all the markets. That doesn't surprise me too much either. Didn't close at low of day, unlike the Dow. But sorry, I just feel like we're still gonna have to go lower, led by the banks. And remember, I haven't got there yet, but interest rates. It's really about interest rates. Let's look at the banks. That's a pretty ugly close. That's lower close in terms of proportionality at end of day. Then the Russell, I think we're just going to go lower. I said it only takes 2 or 3 candles to go all the way down here. I forgot how many candles I said, but I know I said not too many. And look at that. You can imagine today testing this low, and what if there really is a bank? And I keep saying this, and I'm sure I'm going to be correct on this. What if there is a bank that goes bankrupt again? And not necessarily a small bank, maybe one we've heard of, like a mid-tier bank. I don't know, Schwab, for example. It's not going to be that one, but something of that caliber. I'm not talking about Goldman Sachs, JP Morgan, but I'm not talking about some Pacific West unknown stuff. I'm talking about something in between. Well, anyway, that's just a little prediction, but I think we're going to go lower. I think there's going to be more bank failures. Look at interest rates. That's what started it all, and we're back there. So yeah, I expect another move lower, and I think the banks will start because they haven't necessarily led the markets lower recently. They were initially when the banking crisis started, of course, and now they've stopped a bit. You know, the Nasdaq took over. There was some big caps and all this stuff, but I feel like we're gonna have a return. You know, the banking crisis strikes back. So I'm looking for XLF testing this low here. Maybe not today, but possibly. KBE, look at that. It's not actually as weak. That's surprising. Sorry, you're gonna have to go back down too. So I expect that to roll over. Maybe close below 34 at least. KRE similar to the KBE. Actually, that's quite interesting. I didn't even notice that the XLF was much weaker. Must have been some big bank that had horrible news or something, but I don't care. I lump them all together, to be honest, and I just think the banks have to go back down low. I know they've come down a lot, and I don't like to, be selling or shorting something that's already come down, just like I like to buy things that have come down, but I do expect them to to move back down mainly because of interest rates, which we will move to now. This will be the most important section. Look at the 1 year, Now, I'm recording this on Thursday, I believe. Yeah, geez, I forgot what day it was. Thursday. So we've already moved a bit higher, but look at the close here on Wednesday, closed very high of day. We're very close. I would have said we're going to test 5.3. We've already done that, which is quite funny, but I think we'll return up there. Even if we do get a bit of a reversal candle, I do think we'll go back up there and actually close above there and keep going. I don't see why the 1 year can't just keep going. I did think that interest rates would just level off a little bit and then go back up, but I'm always surprised by how fast the moves happen. So sometimes the retracement doesn't happen, or it happens in 1 day and like intraday, and then it resumes back up again. But I think this paints a very obvious picture. Bonds were bought during the banking crisis. We want to go back up. We're going back up. I felt that actually that interest rates naturally wanted to go back up. And I think we're just going to go to new highs, at least in the shorter term yields, until something crashes, until something breaks, specifically a bank, and then people freak out and buy bonds again. But I think we'll be higher in yields, at least in the 1 year, by the time that happens. And I'm not sure if people will be buying bonds as crazy, because we know where that, I mean, reactively they probably will, but I think maybe yields will then move back up again even quicker than it did this time. So that's the 1 year. You can see it's already tested 5.3. Look at the 2 year, look at this. Ever since we closed above this descending, just green day every day. I did think that after this reversal, we'd have a bit of a down move and then go back up, but nope, straight up. And to be honest, I don't see why we won't stop going straight up until either the Fed really pivots. A pause isn't a pivot, by the way. I mean, it might have a reaction in the bond market. Obviously, it will, but that's not a pivot. I want to differentiate between a real pivot, just a pause, and then a move higher again. So either the Fed pivots or there's a banking crisis. Everyone buys bonds, rates go down. But 2 year up some more. I really don't see why it would come down unless it's just retesting, as I thought would happen. But overall up, let's say medium term, 5 year, yeah, same sort of chart pattern. Maybe a bit weaker than the than the 2 year, 10 year. That's the annotation I did from last time. I thought a bit of a retracement and then up, but no, straight up. Um, across the board. 30 year, look at that. It's about to crack 4%. That will probably move other rates up too. Let's have a close above 4% today, maybe on the 30 year, and then it tests it high, it's high. And if the 30 year is going to test its high of over 4%, it's over 4% now pretty much, then the others will accelerate. So yields are going up. I think that has not been translated enough in the markets. I think the markets were down yesterday, because of that also, but I'm sorry, they need to come down a lot more. Let's look at the dollar. The dollar is moving up with interest rates. Hasn't always been the case. And the dollar has been moving up. Well, it wasn't moving up before when the banking crisis happened. So this time we're going to have interest rates going up and the dollar going up. And I think the markets are going to go down with the banks. So, but look at the dollar, for me, also broke out of its descending, a bit like interest rates. Noticed that at the time, but wasn't as sure that the dollar would move up above this level. Actually, I thought it'd be a bit maybe weak because it has been weak, of course. But actually, recently, I just thought, okay, it will keep going, and it has. Where will it go? This is a bit of a painful move, actually, because it's really impacting gold, silver, and the miners. It's really the miners and the metals are very sensitive to the dollar move. I mean, I was watching the market go down, didn't really have an impact on the gold, silver, and miners. They didn't go up because the markets were going down as they used to. But they were really reacting directly to the dollar. So it was kind of irrelevant what the markets were doing. It was just inverse to the dollar. And so this dollar move up will impact, and we'll take a look at the metals, obviously. But where do I think we're going? Well, you can see the big target. I feel like it might have resistance before where it used to have resistance because we've been so weak before. You can't just go all the way up there or even beyond. So I feel like maybe 105 will be a problem. So I made this target a bit big just to make sure it sort of cover all the levels. But I do think that we start hitting resistance at 105. If we do go above that, and who knows, maybe there's a banking crisis by then and the dollar is acting positively to it, as it should, to be honest, as it wasn't down here, but as it should. But 105.5, 106, the whole level, 105 to 106 basically will be resistance. And you got to consider how long it takes to get there. If it takes 2, 3, 4, 5 trading days to get there, who knows? Normally when I say that, it happens in 2 or something. But also the time element should be considered because of this descending. I just feel like this descending will also converge at some point, maybe perfectly if it takes several trading days. But anyway, 105 to 106 should be resistance, dollar going up. I don't see any immediate resistance until 105, so that should continue. Let's look at commodities. Copper, there you go, smack from one level to the other. Will it hold? To be honest, it should. You can see why. Look, it was resistance there, it was support there. So for me, this is a level. That's why I drew it. But if the dollar keeps going up, I'm sorry, you're just gonna have to keep going down again, and then gonna have to zoom out and consider some next levels, which I haven't done until just now. You can probably see why. I'm not even drawing. You can probably see now, probably see why I'm drawing this level here, 3.2-ish. I know we went a bit lower, but I think this will be support. We hit it several times on these days, on this day, and then here we had the ascending to help out, but otherwise it would have hit it again. So I think that's the next level, really. 3.4, maybe. Well, whatever. That is quite a way down, so it might bounce at 3.4, but yeah, you got to see if this level holds. Let's see how it holds out with the dollar. I think the dollar going up is hurting all metals, including copper. So copper's weak. Natural gas, that's done what I thought. Look at that ascending. It bounced off the ascending. Beautiful. So a full retracement of the breakout, let's say. And now let's see, if it starts to close below the ascending, it may have to go lower and just chill out for a bit and then go higher. I still think it's going to go higher. But otherwise, back up, back up to test the 2.7 range and beyond. And I said this too. I said I don't think it will matter what the dollar does. It's one of the commodities that has been obliterated and isn't as sensitive to the dollar as the others. So, and I think it's immune to the market moves also. So I think whatever happens, natural gas is going to sort of go on its own chart pattern and not care about any of the other elements, interest rates, dollar, markets, whatever. Geopolitics obviously is a factor, but I mean, it should be higher because of geopolitics. So even that might be discounted or irrelevant at this point. So natural gas is still bullish on that one. Oil, it had a nice move. It had to have these last 2 candles to not take it all the way down um to the bottom, but not sure because oil is a bit sensitive to the markets. I think the markets are going to go down. So will it drag oil down back down to here? It really could. Also a bit sensitive to the dollar, not too sensitive, but a bit. So if the dollar keeps going up, maybe oil also goes down. So, with rates and dollar going up and market going down, which I think will happen, I think oil will at least not be as strong as it otherwise would be. So at the moment, it's in the middle of the range. I think naturally it wants to go up, but let's see how crazy the markets are. You know, it's forces that it can't control. So I'm unsure actually. So I'll just watch it, and I'm not really in it, so I can just watch it comfortably. Uranium, you know, this one, I really think that, okay, fundamentally, I think it's going to go up. It should go up long term. Technically, I mean, it's got pennants within pennants. It's got this attempt to break out. Okay, it broke out, it retraced. That's nice. Just like natural gas, by the way, you know, break out, retrace, and then go back up. And uranium did go back up, but back down we go. Is this because of the markets? I think so. I'm pretty sure that that's why it's retraced again. It shouldn't retrace that much. I mean, one candle is okay, but two, now it's you know, if you fail, this could be a mini double top. And if it starts to go lower and close below this, then well, I don't know, you've got support here also. It's it's hard to tell, I think is what I'm saying. You know, I don't want to get too technical because there are way too many technicals here. But if the market goes down, which I think is going to happen, I think uranium is a bit sensitive to that, and it could go down too. And if it doesn't hold this ascending, all right, can I at least say that? If we go lower again and this double top failed and we go back down to this ascending part of this pennant, then that's the last. Well, no, it's not the last, it's the second last. But if that doesn't hold, then we go all the way back down to this level here. But that would entail not a massive, but a pretty decent flush in the markets. And then you probably got everything crashing, and uranium is just one of many. But yeah, it's you can see we're getting to a tight decision is coming, and I think the market might win. I think it's just unlucky that the markets will come down at this point and probably drag uranium with it. But you know, uranium might lose less than other commodities, so even if it goes down, it could be a winner, if you know what I mean. Okay, we'll see what happens with uranium. Gold is very sensitive to the dollar. It did not close above this descending, which was really a very short term, more of a 15 minutes. You can see it hit its head again during the 15 minutes. Then, yeah, anyway, this one can be deleted. So let's go back to the daily. Now, you know, I see a lot of people on Twitter. This is going to have people who are really bullish, and I was bullish, but people who are really bullish the whole time. We're going to crazy astronomical levels. They're now really bearish to try and make up for it. Me, I'm just going to stick to what I say. Look, I think gold is going to go and touch this ascending part. And I think silver, because people are making crazy predictions in silver, like we're going all the way down here. I mean, yeah, we could definitely, you can see the ascending. I've had it there for ages, but I think silver will make support when gold hits this. So I'm looking for gold, and gold doesn't look good. Look at this close here. You know, massive, not massive, but a rejection of a break out here. You know, the one I drew. The 1980s close, didn't get that. Close at low of day with the dollar going up. The dollar's gone higher. You can see the candle today. Obviously, today is very young, but I think we're just going to smash through 1950. I mean, imagine how many banks want to just push it below 1950 to get a flush. They can easily do it. They will. So I think we're going to flush 1950 straight to 1930, whatever this zone is. Let's say 1935. That will happen in like several minutes probably. And then let's see what happens. You know, let's see how strong the dollar is today. If it keeps going, I think it'd be very hard for the dollar, for gold to close below this ascending. I think it might venture below. You could have like 1923. Oh my God. But then it closed at 1933, you know, and then we're pretty much on the ascending. It doesn't have to be, no one is looking at my chart. The world's gold traders are not watching my chart, but they've generally got the same chart patterns, I reckon, and a close around about the ascending would be sufficient to say it didn't close below. So I think we're gonna, I don't know if it'll be today, but I think we're gonna test the ascending, put it that way. And this 1950 is so vulnerable. I mean, even today it should flush, to be honest. Silver, it's weaker than gold. I don't even want to look at silver because I'm just basing everything off gold. I think silver will just go down. You know, if 1950 is flushed on gold, goodbye, silver will go down. I don't know, maybe 22.5 or something. It seems to work in 50-cent increments. So we could go back down to here to flush. And who knows, we might even get to this ascending painful. You can see this double top failed. And, you know, I thought that this descending line here that everyone's watching, including me, I thought we would test it, but I didn't think it would hold very much. And look, it was kind of irrelevant. You know, it worked for 1 or 2 days, and then sorry, you know, it even became resistance, as you can see here. So for me, to keep it simple, um, it's all about the dollar and it's all about interest rates. Interest rates are helping the dollar go up, and the dollar is seriously hurting the metals. And for me, the metals I judge based on gold's chart, because silver is, there's just no obvious support unless you just go by 50-cent increments. But there is this one ascending line. I think that's all I can say. On the upside, resistance, I mean, the resistance is this descending line for silver, and for gold, resistance is obviously where we've hit resistance here, 1980, let's say. I don't think we need to think about resistance because I think we're going to go lower, actually. The miners, very weak. You know, the GDXJ weaker than the GDX. That's also a sign of weakness, typical on the way down too. Closed, you know, near low of day. If gold and silver flush, let's say even before the open or during market hours, this will go lower. This has a much bigger chance than silver of hitting its ascending. So this zone I did identify as support. You can see why, you know, we hit it several times here and it was support several times here. So for me, this is generally a line. Maybe I'm off by a couple of cents, but this is a support zone. But again, we may venture below it. And if gold and silver flush, then it will just be an irrelevant support zone. It will act as resistance on the way up, possibly. But watch out for the ascending. I think that will come into play. GDXJ, exact same thing. It's also at a small support level, as you can see. But I think this will hit ascending support before. And you know what? I've seen it before. GDXJ loses its ascending support, but GDX doesn't. So I think the GDX ascending support will probably be the one to work off more than GDXJ. Okay. All right, that's all. I'll leave it there. I hope that was useful. Let's see what happens today.